Hey everyone, it's Brad. In this video, I'm going to show you one simple thing that could save you or cost you hundreds of thousands of dollars in your retirement account over the course of your life. Let's jump into the computer. Okay everyone, we are in the computer. So now is the time to go ahead below the video, hit that like button. If you enjoy content like this, hit that subscribe button. That will ensure that all of my videos are getting put on your feed. Thank you. Alright, so today we are talking about expenses. It's important to understand what it's costing you to invest your money in particular funds. And when I say funds, it could be index funds, it could be mutual funds, there's ETFs, there's lots of different vehicles to invest your money, and they all have different cost, expenses associated with them. So we're going to take a look at some of that and show you how big of an impact that can be on your retirement account, especially as it begins to snowball in those later years in life and you're getting close to retirement. So let's look at some examples. These are some of the most expensive funds that you can invest in out there. I mean, these expense ratios, you got 2.1% on some of these. Up here, this particular one they're talking about is 4.5%. So it's important to look at these expense ratios when you're choosing what to put your money in, because this can cost you tons of money over the long term. And then when you take a look at some of the better index funds to invest in, you'll find some expense ratios that are pretty attractive. For example, some of them are free. So it doesn't cost you a dime to put your money in these funds. Right? $3 annually for every $10,000 you invest. That's practically free. This one literally is free. So now I'm going to show you what the difference is in specific examples. I mean, you can use this tool yourself. I'm going to show you right now. You just Google 401k fee. I did this it was years ago. I found this and I love this tool. What are high fees costing you? So here we can punch in your exact numbers and find out how much money those fees are costing you, or if you have low fees, how much that's saving you. So let's do a couple of different examples. Let's say, all right, assumed investment returns. So let's say that we are in stocks mostly, and we think we're going to get about a 10% annual return, because that's pretty typical. And let's say you're currently in a fund that charges 2% a year. It's a pretty expensive fund. Well, if you look at some of the cheaper options that are getting similar returns, maybe you find one that has 0.2%, something like that. It's pretty common these days to find funds that are that cheap. Let's say I don't know, let's just do some random numbers. I already did 20,000 once, so let's try that. And you want to try to invest $5,000 a year, and you are 30 years old. Can you tell I've done this once or twice? Alright, so running those numbers, look how much we would save over the course of those 35 years until retirement just on that fee alone. That's the only difference in these calculations, is the fee. We changed the fee from 2% to 0.2%, and it saved us $664,000 over the course of our life. That's $664,000 in your pocket when you retire if you choose the lower fee option. Again, we are assuming that both of these investments return the same amount, that 10%. So you have to understand what kind of funds that you are investing into. Of course, you got to look at returns and look at what kind of stocks that they're investing in. But if we assume that these funds are equal, that simple change saves you just an insane amount of money. I mean, alright, so if you start with 20 grand, you're putting in 5 grand a year, you're 30 years old, you're going to retire at 65, and we can do any numbers for this. But this is saying, with that higher 2%, you're going to retire with $1.1 million in the bank. And at 0.2%, the same thing, just with the lower fee option, you retire with 1.8 million. That is crazy, right? And these numbers just get even crazier the younger you are. The longer you have to invest, the bigger these numbers get. If you're a 20-year-old out here, if you're 20 years old right now and you're watching this, good on you for, wanting to get into your finances that early in life. Maybe you don't have as much in the bank right now, but you're getting started. Maybe you can only afford to put $1,000 in. Let's check it out. Just about the same. $640,000 you're going to save by going with that lower fee option. This is incredible, guys. You're talking about almost doubling your retirement account. If you're a little bit, let's try if you're a little bit older. Maybe you're 40 now, you want to retire at 65, maybe you have $50,000 in your account and you can afford to put $5,000 in a year. Let's check it out. You're still going to save $286,000. At 2%, you're going to retire with $700,000 in the bank. At 0.2%, you're going to retire with $1 million in the bank. These numbers are astronomical. It's something that you absolutely have to pay attention to. Go look at what you're putting your money in. Look at the fees. Compare the fees to other funds. I'm not telling you you have to get out of a high fee fund. I'm telling you you need to understand what you're investing in. If you're in a high fee fund and you're getting fantastic returns on your money while other funds aren't, then you might be in the best option. But if you're in a high fee fund and it's giving you 10% return while there are lower fee options that are also returning 10%, then it does not make sense to be in that higher fee option, in my opinion. And if you're in the government, in the military, and you're invested in TSP, Thrift Savings Plan, you'll probably be happy to know that this plan has some incredibly low rates as well. Incredibly low rates. Like 0.04%. Insanely low. So we can put that in here as well. 0.042, I think, is the percent on TSP. Compared to the average mutual fund, 2%. Let's keep all this stuff the same. Let's say maybe you're 25 because you're in the military. Maybe you don't have that much of a balance. But you are going to try to put in $2,000 a year. These are just random. Again, this is 401kfee.com. You put in your own numbers, figure this stuff out. It almost doesn't matter what you go with. These numbers are just going to be too good to be true. You have to look at the fees on the funds that you're investing in. So this government or military member, because that how low the fees are on that TSP plan, you're going to save $585,000 over the course of your life by investing in the TSP instead of something that costs 2% a year. It's just astronomical. Okay, so the main thing here is to look into the fees on the funds that you're putting your money into because it could be costing you a lot of money. If you liked this comment, hit the like button, subscribe to the channel, and leave a comment below. Thanks.